Hi, my name is Jerry Thomas, and I'm a construction loan officer here at Cranbrook Loans. Almost every day, I get phone calls from people that want to build a new home but don't understand the construction lending process. So I've taken a little time and I've put together this PowerPoint presentation to tell you a little of the basics of construction lending. I hope you find it useful. So the first thing you need to understand about construction lending is that this can be done one of two ways, with a single close loan, or you can do a two-time close loan. Now, I think everybody in the industry agrees that if you can do this as a one loan process, which means there's one application, there's one closing, there's one appraisal, you start out as a construction loan, but then this loan just rolls right over into your end loan. I think we all agree that that's the way to go. But not everybody can do a single close. If you're going to be an owner builder, you're going to have to do a two-time close, which means you're going to have to get a construction loan from a construction-only company, and then when the home is completed, you're going to have to refinance that loan into an end loan. So unless I tell you otherwise, assume that any loan that I ever speak to you about is a single close loan and will be your construction funds and your end loan funds. So the qualifications for a conventional construction loan are a little tougher than a purchase or a refinance loan. First off, you're going to need at least a 10% down payment or 10% in land equity to qualify for a construction loan. Plus, you're going to need your closing costs too. Minimum credit score on a conventional construction loan is going to be somewhere between 680 and 720, depending on your equity, down payment position, and what lender we put you through. If you've had past credit issues, such as a bankruptcy or a foreclosure or short sale, you may have to wait anywhere from 4 to 7 years before you can close on this loan. And your debt to income shouldn't exceed 43% of your gross monthly income. So that's your total house payment plus all your other credit obligations. Plus, if you're not planning to sell your current home, if you own your current home and you don't plan on selling that home until your new home is completed, we're going to have to include that payment in your debt to income ratios. Now, if you don't qualify for a conventional single close construction to perm loan, then you may qualify for an FHA or VA program. First off, the down payments are much lower. FHA only requires 3.5%. VA is no money down. You still need your closing costs, though, along with that. And the minimum credit scores are just 620, although a 640 would be better. There's slightly better programs available if you have a 640 credit score. The really great thing about these programs is if you have had a past credit issue like a bankruptcy or foreclosure or short sale, you don't have to wait 4 to 7 years. It's just a 2 to 3 year waiting period. Do keep in mind that the government programs, the FHA and the VA, are only for principal residences. So what kind of home can you build? Well, if you're building a single family home that's going to be your primary residence, and the home is either site built or a modular home, meaning that it's built to the state building code, then you're going to be eligible for a minimum down payment program, whether it's conventional, FHA, or VA. Now, when we start getting into vacation homes, investment properties, duplexes, log homes, manufactured homes, or homes with high-end features, homes that are on 10 acres or more, all of these are a little tougher to get sale comps on, or lenders have overlays. So you're going to need probably a little bit more than a minimum down payment. You might need, say, a 20% down payment to do some of these homes. And then there are homes that are just so atypical for areas. Things like pole barn homes, container homes, triplexes or quadplexes, concrete homes. You may not be eligible for any kind of standard financing on that. We may have to go out and find a very specialized lender to help you with those types of projects, or financing just may not be possible on those homes. Give me a call and we can discuss those types of homes. So the application and closing process, there's a lot of similarities and a lot of differences between construction loans and purchase loans. To start, the documentation that we collect is pretty much the same, whether it's a purchase, refinance, or a construction loan. We're going to document your income. We're going to want to see bank statements. We're going to run a credit report. It's a little different on a construction loan because we're going to need 2 purchase agreements. We'll need one for the property if you're buying the property, and then we'll need a contract with your builder for the home that you're going to build, along with the plans and specs. The appraisal on a construction loan is done a little differently. It's done off of those plans and specs that you give us. Obviously, there's no existing home there for the appraiser to go see, so the only thing they're going to know about the home you're building is by the plans and specs that we give them. They'll go out and visit your lot. They'll finish up the report. And on the bottom of the report, they're going to check a little box that says subject to completion, which means at some point after your project is done and your C of O is issued, they're going to have to come back out and say, yes, they did build the home that they sent me the plans and specs for. Now, with a construction loan, we're going to have to get your builder approved by the lender. And these types of loans take 45 to 60 days to close. Normally on a purchase deal, we can do that in 30 days or less, but there's a lot more moving parts with these loans, so they take a little bit longer. And finally, at closing, you will need to go ahead and bring any down payment funds that you were planning on bringing in or required to bring in. And all of this happens before we do any work on the property. So let's talk about after closing, the construction phase. It's very important that you or your contractor don't start any work on the property until we close on the construction loan. Once we close, your builder is going to be paid via a draw schedule that we all agree to. The first draw is typically for the foundation. So the builder will go out, they'll do any lot clearing that they need to do, any rough leveling of the ground, they'll dig for the foundation, and then they'll put the foundation in. And then at that point in time, your builder is going to submit sworn statements and waivers of lien attesting to who's been paid and who hasn't been paid. The appraiser's going to come back out to the property and say, yep, the foundation's done. I don't see any red tags here from the building department. And then, again, per the draw agreement, the bank is going to go ahead and issue a check to the builder and subcontractor for the work that's been done up till that point. Now, during this construction phase on a conventional construction to perm loan, you're not going to have a fixed monthly payment. You need to think of this as a line of equity, and it's paid back like a line of equity. You're just going to get a bill once a month just for the interest, just on the funds that you have used. Now, the FHA VA program is a little different because in a fashion, we roll in those interest payments into the loan amount. Now, when the project is completed, that great day, the project is done, the certificate of occupancy is issued, and the builder has requested their final draw. When that day comes, the process kind of hits a fork in the road, and if you were doing a single close loan, the bank is going to send you out what's called a modification agreement, where they're just going to let you know, okay, your loan is being modified from an interest-only construction loan to your 30-year, 15-year fixed-rate mortgage. and your first payment is due on this date. If you've done a two-time close, then we have to start the process of refinancing you into that end loan. So how do you get started with all of this? Well, I'd recommend that you work with an experienced construction loan officer that offers a wide range of products, not just one program that their company offers. The key here, though, is working with someone experienced. As I like to say, this is the deep end of the mortgage pool. Anybody that's been in the business a year or two and has a good processor should be able to help you with a simple purchase or refinance. But construction lending is a lot more complex. I've got almost 30 years experience doing these loans. I'd love to help you with this loan. One of the ways you can find out about my experience, or really anyone else that you're talking to, is to go to the website you see on your screen there, the nmlsconsumeraccess.org site. This is the licensing system all of us loan officers have to go through. If you go in there and put in our names or our NMLS number, that's the National Mortgage Licensing System number. If you put either of those information in there, you'll be able to pull up what states we're licensed in, what companies we work for, if we've ever had any complaints against us. And I think one of the most important features on this site is you can actually look up who someone has worked for and for how long. I just, really caution you to stay away from people that have only been in the business a year or two and have only spent time with companies that strictly do refinance work. Like I say, it takes a lot of experience to get these loans closed, even in that 45 to 60-day time frame. If you work with somebody inexperienced, you could find yourself 3, 4, 5, 6 months into this process and you're still not closed. So after you find someone you're comfortable working with, you should get pre-qualified. And this is a pretty similar process to when you're purchasing a house or doing a refinance. We're going to want the documents on the screen there, your 2 most recent pay stubs, last 2 years W-2s, current bank statements. We're going to run your credit report, and we're going to see if on the face of it you meet all the requirements for the program. If you already own your land, we'd love to see the settlement statement, a survey of the property. If you're going to be buying your land, eventually we're going to need that purchase agreement for the land. And we'd also like to get some kind of idea as to what kind of home you're going to build. Or if you've got your agreement for the home already, that's great, that's perfect. Send that in to us along with the plans and specs for the home. I want to give you just one last note here on your land. If you purchased your land with a realtor, great, fine, you should be all set to go. But if it was a private sale, if it was a tax sale, if it was gifted to you, or if it was split off from another piece of land, please let me know, or whoever you're working with, let them know as soon as possible about this. There might be additional steps that are going to be required to perfect your ownership of the property. So thanks for listening. I hope you found this helpful. Love to do business with you. So if you have any questions or you want to get pre-qualified, my information's on the bottom of the screen here, and I hope to hear from you soon.